Yeah, the dichotomy is pretty straight. If you're off-mall, off-price, you win. If you're on-mall, full price, you lose. If you're online only, you win because your cost of capital is zero. But other than that, there's great companies and not so great companies. Home Depot, for instance, that just reported, is a fabulous company, best in class, great numbers. Walmart's a fabulous company, best in class, great numbers. Costco is a best in class company and always is going to be. So there's also that dichotomy of the really great companies versus everybody else.
But then what about Kohl's? Because that's also off-mall, right?
They're off-mall, full-price department stores, so they're kind of like they were better than the customer thinks they're a full-price store, just like they think Macy's is a full-price store. You and I both know neither one of them are full-price stores, but they don't think they're off-price. They think Ulta's off-price, and they're not. They think Children's Price is off-price, and they're not, because they're over on that side of the mall, you know, the strip center, as opposed to in the enclosed mall. It's just the perception of the customer, and some of it's also the age of the store, of course. How new are you to the customer?
I thought home improvement was not in the sweet spot right now. I mean,
it's not.
It's not, but Home Depot still had great numbers.
Home Depot succeeded because the professional person that goes to buy that kind of stuff always goes to Home Depot. That's what drove their numbers this time, because they had a tough time in lumber. Lumber prices were down.
But mortgage rates are down.
Mortgage rates are down, but we're not building houses at the rate we needed to because there's nobody to swing hammers. But Home Depot turned in a great number anyway.
You have to look at every single retailer.
I know, I'm trying to keep all these numbers straight.
How about TJ? I know I don't know as much about it. I'm deferring to you. TJX reported, too. How was that?
Yes, TJX reported. So they actually had softer sales than we had expected. They were still up, so that's good because not everyone reported stronger comparable sales. The home goods division, so obviously that sells home furnishings and home decor, that was flat. That was a surprise because that should have been up about 3% or so, but I understand some execution issues there and some supply chain problems. What's interesting with the TJX play, I think, is twofold. One, when it comes to tariffs, they're a little less directly impacted because they're buying often from someone else that's already bought it first, right? So they're at least one step removed from a higher cost of tariffs. Number two, this treasure hunt has continued to be very beneficial for TJX. They don't really have a traditional e-commerce strategy. People are still going to the stores. 20th quarter in a row of traffic increases there.
You're totally outspoken on the lack of effect of tariffs on retailers to this point, right?
Well, I'm totally outspoken that the tariffs are going to get absorbed in the price of money. They're going to get absorbed at the plant. They're going to get absorbed in the supply chain and at the retailer.
Home Depot mentioned tariffs, but they mentioned it in light of the consumer being adversely affected with sentiment, not by prices themselves.
And I talked to Home Depot CFO Carol Tomei just about an hour ago, and she said, look, we have a way, you know, these apps on our phones, and we sort of track different consumer spending and sentiment metrics every day. So far, we have not seen a top-line impact from tariffs on consumers. However, we are worried about what happens with List 4, which is why we have decided to lower our sales guidance. But that's more of a response to what could happen to the consumer spending overall, not just at the Home Depot impact.
Well, you heard
if you have less discretionary spending, then you may be spending less everywhere.